and I'll hand you over to Tom Williams. This is Tom's session. Rita's here, myself, Peter, and Tom Williams. So, are you ready, Tom?
Hello everybody, Tom Williams here, speaking to you as usual from Worthing, Sussex, England, and thank you for joining us. And I've got, can you all see my chart? This is the daily future, right? Now, there's no reason why, well, I've got the future up because at least it's running live, where the end of days, okay, it brings it up to date to yesterday, but it's nice to see a real live chart. Now, if you read the newsletter last week, I think we put it out, what day was it, Sunday? We analyzed the market and we predicted it's falling. Now, it's very important to know where the trend is, right? So, I think that bar there, look. I think that bar there might have been Friday, and that's where we finished the, Friday. And that's where we finished the newsletter. Now, the reason why is pretty obvious why the market's falling. Well, first of all, you're in a downtrend, a clear downtrend. Right, it's following the typical trend lines of Wyckoff in a falling market. First two highs and the first low, wherever it is, somewhere here, and let it run into the future. Now here last Friday, right, it went up, but it's gone up on a very narrow spread, look. Oh, this is Monday. No, sorry, no. I do apologize. I can't see all that well, as you know. This is Friday, look, a wide spread up. And I think I warned everybody, be careful because it's Friday. And they do their utmost to try to mislead you, especially on a Friday, especially before a holiday. Because the TV companies, the media, magazines, they know probably less than you do. And they put all the reports and people read it. In other words, they mislead and many traders there doing that. However, we predicted that it was weak. There's no stopping volume around here, look. So there's no reason why it should go up. Right, except that it's in a downtrend, right, Monday, up it goes, but it's a very, very narrow spread, look, and closing in the middle. The volume was very low, look, so it's obvious if you're going to write a book and you wanted to display no demand, that's what you would show. You'd show that bar there, look. It's so obvious that even the computers come up with a automatic signal telling you exactly what I've told you. So it's all there, look. And on that, of course, the market falls. So we're biased, even though you get a wide spread up like that. But even here, look, it's a wide spread up, but it's still overbought. In other words, it's above that trend line. And you've got weakness here. And you've got a little bit of volume, but not a lot, look. So there's not a lot of enthusiasm here to go up. And that's why we're influenced by these daily charts. So that you're not misled, shall we say, when you look at your intraday charts. Right, so what we'll do, we'll look at another lower time frame, see what's happening today. Well, let's try 7 minutes. I've looked at one of those for a long time. It's a 7-minute chart, look. It's interesting. But all these charts, time frames, they all work. There's some stopping volume here, look. But when you see stopping volume, okay, it means professional money must have stepped in and bought. Yes. But it's not buying that's going to cause a market to turn bullish. For that, you need what we call a selling climax or bag holding or something dramatic like that. But when we see it, we'll spot it. But there's some stopping volume, look. It's only a 7-minute chart. So I'm not sure exactly what time that was, but it's there, look. 7 minutes. Okay, now on that buying, look, you can see it's come in, high volume. It goes up a few bars, look, but you know you're not expecting it to go to the moon here, because you know that even if they want to take it up, they're going to have to test this. Because although you've got high volume on these down bars, it means that the high volume represents supply. In other words, there's a lot of trading going on. Now, all we're interested in, has the so-called smart money absorbed that selling? And that's why we need a test. Okay, so we're expecting a test. We're not going to do anything till we see a test. And lo and behold, down it comes, look. And although it's come down to that level, the volume is still quite high, look. So there is supply present. That coupled with the fact is that main daily chart appears to be trending down. So we proceed with great caution if we're thinking of going long. But you may get a small up move with this. But there's volume there, look. Activity at that level back here, look. I'll draw a line across there, look. That's it, look. Now that line there represents where the supply was. Now what we want for this market to go up is a down bar near that or into it, showing low volume here. But it's certainly a lot lower than that, look. And that's why it's drifted up a little bit. But if you saw that really low volume, you have to jump in and go long. We're more or less really talking about scalping here. Okay, it's running live, so the cursor keeps jumping forward. Okay, so, okay, that blue bar, look, no demand, look, low volume. So it's not going anywhere because of the supply present. It needs to retest this. So right now, it's drifting sideways. We know they've been trying to take it up for up move. You've got to have up and down moves for the professional to make money. Now, Rita and Peter are here, and they told me an interesting story because yesterday, Rita made money shorting the market, and Peter, the husband, made money going long in the same market. Today it was, sorry. So there you are. So, but they're getting very, very good, I must admit. We got a question.
Yeah, so Sebastian said exactly the same as you, Tom. There is still supply in the market, and it looks as though the market might retest the 1622 low. Okay, question from Thomas. If it's not going anywhere, does that mean that either accumulation or distribution is occurring? How can you tell the difference?
Well, you see, everything's not black and white, unfortunately. Now we know that they started to accumulate. Why? Because of this, look. There, it's telling us, look, the down bar after a down move, and there's a high volume. Look at it. Look there. High activity. Okay. But we know that the professionals will be looking at that, and they can't risk taking it up until they know that supply there, right, has been totally absorbed. And that's how we know they're trying to accumulate. But the supply is still there, look. That's why it hasn't really gone anywhere. However, it is a lot less than this volume here, and that's why it's drifting up, look. It's amazing how it works, but that's it. Market works on supply and demand. And if you look at it that way and no other way, you'll see it. Okay? Now, Sebastian's listening in, and he's said a few words there. And, of course, Sebastian's an extremely good trader. He's actually lived with me for 2 years learning this stuff. So he lives in Jersey, tax-free island, where the Queen puts her money. Yeah, but anyway, he's a good guy, old Sebastian. But there you are. Okay, any questions? Yes. Rita says yes.
Question from Grigory. What bar should be considered as a start of accumulation? One at 1547. Do you want to point to that, Pete? There must be that one with the indicator. Or the next one without an indicator. Okay. Which bar to start accumulation?
Well, I wish it was that clear. Believe me. You have to have, as Gavin says, open mind. You have to, when you see these down bars and the volumes increase like that, then you know that some professional money have stepped in. But they're under pressure trading, so I'm sure they got their problems as well. But they can't risk taking the market up when there's supply present, because that means that tempt other professionals. Somebody dump huge amounts on them and they'll lose, because it costs them money to make these moves in a market like this. But we don't use formulas. We don't use patterns. We don't use mathematical formulas. We do nothing like that. So you can't say, well, what bar do they start or what bar do they finish? You have to learn to read the chart. The charts work on supply and demand, right? If there's more buying coming in than selling, then the market will be strong and go up. If there's more selling, right, buying, then the market will fall. But this is why you get all these signals, and we give you all this information. And but keep with it. I mean, Rita and Peter here are beautiful examples of learning how to read these charts, and Sebastian.
There's quite a few questions. Leonard is asking, does the low volume test have to be below the close of the accumulation bar?
Peter, you want to answer that? Sorry, what was your question? Does it?
Volume test have to be below the close of the accumulation bar?
No. 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 See, right. You've got to be careful how you think of these charts in your mind. A test is usually higher unless you, well, there is one test that we don't use the term, and that's a springboard. And that's really a terminal shakeout. Now I say terminal, when they've accumulated enough, right, then if they can, that's if they can, not always, they ram the market down to catch all the stops below the market, shake as many people out as possible, lead as many people astray as possible, only to close on the high and shoot up. But they call that a springboard. It's sort of terminology I don't use. I call it a shakeout. But a test. Now Rita picks these tests up. And what it is, a test is a down bar, a narrow spread. You can see there's no serious pressure on the market. It goes down, closes in the middle, and the volume is low. And then if in the background you've got, say, accumulation like we've seen over here, look, here, then that means that test is telling the professional money there's no supply, keep going, there's no enemy ahead at the moment, so keep going. And you jump in on those, you see tests all the time, especially in a strong market.
There's a question, and it's something I had as well. It wasn't a question, but I thought, not sure about that. Not definite enough for me. But where's Leonard? Yeah, Leonard says, is that black bar not a test? Can look at it. I mean, I thought maybe that's a test. Yeah.
Yeah, you're right. It is a test, isn't it? Any down bar or bar that closes, goes down, and the volume is low, which it is, look, and closes on, it's black because the computer colors them when they're level. That is definitely a test, look. And that's why it's gone up a little bit. But it's hesitant to go up because of the supply here, look. Here and there. Well, that's buying, but this is what they're worried about here. Okay?
Okay. Sebastian is saying accumulation happens first and testing comes later at a higher level. A test should be into the body of a stopping volume bar, and yeah, that's an ideal, wonderful setup when you get a test back down at this level. Well, the very high volume is. If you comes back down there and tests on low volume, that's a perfect setup. But you can't always. The market doesn't do what you want all the time. So quite often it will just keep going, and then you might get a test later on. That's the sort of thing that I look out for as well. I like to see the change of the trend and then see a test, and that's a dead. Well, I mustn't say a dead cert, but it's a. But this at the moment to me is not wonderfully obvious, and I wouldn't go near it. Yeah, and Tom's agreeing. He wouldn't do anything with it. It's nothing really obvious there at the moment. I'm just reading the questions and trying to speak at the same time. Yeah, Eleni, this might be another test. You might see it. Personally, I like to see some kind of up move, and then a test. When it's sort of going sideways, well, you know, I've seen it going sideways, up, down for ages. And yeah, you don't know yet. There's nothing really obvious. Yeah. So it's not rushing anywhere. Right. Colin is saying, if the professional money is now buying or accumulating, can we expect the price will not go any lower?
will the price go any lower? Well, it won't go lower until we see a sign of weakness, right? And we haven't actually seen weakness yet. Now, we're only talking about scalping, and we're not talking about long-term moves, right? Because the daily trend of the chart is down. So we've got that inherent weakness right behind us. But you can make money if you can spot these small bullish moves, but it's not going to fall because we haven't really seen any serious sign of weakness appear. Serious sign of weakness is high volume suddenly appearing on up bars, up bar on narrow spreads with no demand. This is the sort of thing that's going to say, all right, I'm coming off. I'm fed up with trying to go up.
Sebastian's pointing us to this. This is the 15 minutes. Might show us a better...
Yes, all these time frames you can look at. What's Sebastian saying about 15 minutes?
A nice test into stopping action. So I assume, although really this isn't very big, is it? This down here. This one.
No. No.
But there's that, and then it comes along and...
You are strongly advised to keep plugging away at these charts until you can read them. I mean, look at this. This is obvious. What we do, Rita, Peter does, and I do, we don't touch the market unless we see something obvious, right? Because the market's so cunning, it's so devious, it seems to automatically go against you. And this is something obvious. Look at this. Now, if you can't see that, you may as well go home, look. Look. Right? I mean, that's fairly obvious, look. And that's why it's come off. But here, the reason why this market's not going anywhere is because when they tested it, there was too much supply there. And the market's trending down in the daily chart. Be influenced by that daily chart. I would advise you to listen and read that newsletter we do.
We have a question here from Steve, who is new. We didn't ask at the beginning who's new, but is there anybody else in the room who is new to VSA? Very new. Just type in N in the box, or yes, or whatever you want. Okay. There's a few new people, and Steve is asking, what is a test?
Right, I'm glad you told us you're new, because I've got no idea. You know, we get new traders or people coming in and learning this, and you're one side of the world, I'm here. I've got no idea sort of experience. Now, what is a test? Right, a test is a term we give the chart action that determines whether there's any supply in the market or not. Now, how I explained it several times in the past, which I think is quite a good illustration of what a test is. Imagine you're a general in the Second World War, right? You've advanced across wherever you are, okay? You set up a camp in a wood, right? And there's a town ahead that you want to capture. Now, because you're a good general, you don't just go charging in, guns blazing, and hope for the best. So what you do, you settle down and you bomb the place first. You shell it. You send aircraft in and bomb it. Okay. This ensures that as a general, what you're concerned about is if you send your boys in, or troops, right, charging there into the town, they're going to get mowed down by machine guns. Because you're a general, a good general, what you do, you decide you want to test of if the enemy's gone or not, or been driven out. So you send a team of your SAS, or Rangers, I think they call them in America, do they? Yes. SEALs? Anyway, they creep out at night, about 6 or 7 of them, face all blacked out, black clothes, right? They're not interested in fighting. They creep as close as they can to the town and check the defenses. What they really want to know is, has the enemy flown, or they hold up, they're waiting for you? And when they've got that information, they go back to your general, hold up in his camp in the wood, and gives that information to the general. And if they say, look, the enemy has flown, they've gone, then you know you can send your troops in, because the enemy has gone, supply has disappeared, the danger of getting killed, right? But if you're told that the enemy's still there, hold up, sitting behind machine guns, then you're not going to go rushing in, because you know, like in the market, that would be supply is present, which is the main danger to professional people, to wait. And does that make it clear what a test is? And the same thing roughly happens in the market. Now, Philip Friston, who's another VSA expert, did a tape or seminar on test. April 2011. Right, well, yeah, you tell them that.
Hi, it's Peter here. Yeah, every so often we get asked questions about tests and what are they, what do they look like on the charts. Then we end up often saying, well, Philip Friston did one of these webinars that we're doing now some while back in April 2011, which is archived on the VSA Club. So go and find that Philip Friston webinar, and a lot of people say it's very good at explaining what a test is, what it looks like. Tom. No, Rita.
Yeah, Sebastian's saying there's no response from that test, and that's right. The market hasn't responded, has it, Tom?
The black bar, no. No. What was the original chart I had up? 15? What's happened there? Let's have a look. Yeah, but normally you've got to be careful. This is why we've got this widespread down. There's 2 reasons. Either the market is still weak, right? Whenever you see, it could easily be weak because of the daily chart is weak. Whenever you see a widespread down, close near the low, with a slight increase in volume, which the bar hasn't finished yet, has it? With slight increase in volume, can be a sign of weakness as it rushes towards a former area of support. Now, the thing is, here, they're fed up here trying to move this market up, look, even though you've got this black bar, which looks like a test. But there was supply. We saw the supply back here, and that's why they don't like it. This could easily be they're fed up with it, so they're trying to have a shakeout. But it's falling. This, to me, looks like a weak market still, and therefore you would not entertain. Well, I certainly wouldn't entertain any long position in this market like this at the moment at all. Okay? Why? Because it's not obvious enough. I mean, you can push your luck sometimes and think, oh, well, yeah, the volume's low. But these wide spreads down like this is not the sort of thing a strong market does. So you'd be strongly advised not to touch anything in the market unless it's following an obvious principle, because you're just going to lose money. And men particularly, they can lose money easily because, to be quite honest, they like taking risks, a lot of people. They enjoy taking a risk. Where women, like Rita here, she doesn't take any risks. She doesn't do anything unless she sees an obvious principle.
Sorry, I'm flicking around.
Rita's flicking around, she said.
That explains it, doesn't it?
What?
This is the hourly chart. I mean, we are weak, so...
Oh, yes.
Sorry, you need to speak.
Yes, earlier Tom was saying I took a long today and made some money. Rita took a short a little bit later. And I must admit, after I'd made my money, I looked at the chart and thought, shall I take another trade a bit later? And if so, how's it looking? And I looked back at the chart overall, and I remember seeing this bar was, I'm not sure, I looked at the half hour. I was on the Dow, yeah, there was a widespread down. Not terribly wide, but wide-ish. What time is that? And I thought to myself, well, now I've made my money going up. It does actually look a bit weak, and the reason was because of that tail, top tail as Tom calls it, and the bar closed at the bottom or near the bottom. And typically, not always, but typically that's not a sign of strength, it's more of a sign of weakness than anything. And Tom's calling that a top reversal, so you get an up bar followed immediately by a down bar, and all things being equal, that's not a sign of strength at that time anyway. So looking at the overall picture, it's kind of, especially with hindsight of course, it does look rather weak. And as Tom said, on the daily chart, the daily bars, currently it looks like it's in some kind of downtrend. Any more questions, Rita?
Yeah. Gordon is saying, Tom, the daily chart is in a downtrend, so big money must have been selling. Are they now testing to see if they can get the index back to the high for more distribution, do you think? Well, I think we've already answered our question.
Definitely not. It doesn't work like that. Sorry, what did he go to say?
I've deleted it.
Oh, did he? No, no. These markets definitely work in clear phases. If you see a distribution phase, they're selling, right? And then when if it's followed by these wide spreads down, right, close on the low, Gavin calls them gotcha bars, which is quite a good word for it actually, because it's done deliberately to either lock you in or out of the trade. And if you think about that, it's human nature that if you're in the market and it's distributing and you're not sure what's going on, suddenly you're confronted with a widespread down, right? If you was thinking of shorting, then the automatic response is, oh, hell, I missed that. So you don't short. This is what they want. They don't want you in. But on the other hand, if you were long, right, then you're worried because you've got this huge widespread down suddenly appear and you're losing money. You'll then become a weak holder. So then you tend to think, we're talking about the herd, and the herd mentality works. You see it around you all the time. The herd mentality is, oh, I don't like that, but I'm not going to sell now because I'll be losing money. I'm going to wait for a rally or an up move, then I'll get out. But if you look at the way the trading systems work, it shows you they don't let you out, which is interesting. Once these things start moving down, we've got this, what I call simple trading system, and it's hallmarked by red bars, down, down, down. Now the computer, all it's doing, it's colouring the bar red when the close is lower than the close of the close of the previous bar. So you're trapped into a down move, and definitely what we call a weak holder. A weak holders will get shaken out of the market. Again, it's herd mentality. The market keeps falling, falling, and eventually, oh, hell with this, I'm getting out of here. And you're not alone, you're part of the herd. Now, if you're a professional trader, you know how people think. They all think the same, more or less, statistically speaking. Herd mentality is worth thinking about. I usually put it in simple terms. You know, if you want to go to the post office, where it's easier to do your business in the post office, what time of the day to go, where there's no queues and you can park your car easily outside. Why? Because the herd does the same thing every day. Same as traveling to work and back. So think about that. That's important.
One here from John. Question: what is the best time frame to do intraday scalping trades in futures and Forex? Do you use a 1-minute chart?
Yeah, so a 1-minute chart, well, it's a bit too noisy there, if you like. It's too close, as Tom says. What that means is that if you go to a higher time frame, you're more likely to get some sense out of it. That's not to say there's no information in the 1-minute chart, because there is. However, you would not rely on the 1-minute chart only, because, and I've found this out myself in practice, is that if you rely on the 1-minute chart and forget to look at the longer time frame, you could easily be caught out. In other words, you might see what looks like, say, a sign of strength in the 1-minute chart, because you're focusing on that, and you see a sign of strength, and you think, oh, goody. And because you haven't checked the 5-minute or the 10-minute or even the half-hour or hour chart, which might actually be showing weakness, the bias is towards the weak side, and so that 1-minute chart may suddenly turn on you without any warning. That's my experience. So 1 minute has information, but do look at the other time frames, because there's information there too, and the longer time frames tend to have more impact overall than the shorter time frames. So if you ask Tom, as I did once years ago, and other people have asked that same question, which slightly contradicts what I said, if the 5-minute charts is showing weakness, is it possible for the, say, half-hour chart to show strength? Well, the general answer is all the charts should show more or less the same kind of thing in general. Is that right, Tom? Yeah. So you don't get one chart looking strong and the other chart looking weak. It wouldn't make sense anyway. I mean, there may be slight variations as the minutes or seconds tick by, but if you're looking at the whole chart, you'll see weakness on one time frame or the other. So in terms of which is the best time frame, well, it's up to the person doing the trading. I personally, and Rita may agree sort of with this, because we both do scalping, I'll look at the overall chart, of course, a quick glance on the daily to see what the bias might be. I'll then look at the 1 hour, the half hour, and then just drill down just to see how it looks. So if I see a sign of definite weakness, say in the half-hour chart, for example, a nice upthrust after a move up, maybe no demand there somewhere too, I know that looks weak, and therefore I'll be looking for a trade to the short side, and I might go down to the 5-minute chart to look for a better entry. In other words, maybe looking for a no demand bar that suddenly pops up, and often it can be quite remarkable. You get a no demand up bar, and hey presto, it all comes off after that because the market at that time is weak. So start off at the higher time frames and drill down. Does that answer your question?
Yeah, so Sebastian's saying 5 minutes would be the best chart for scalping Forex. So everybody uses different, well, everybody's different. Oh, he's talking about the futures. Peter doesn't trade Forex, he trades the Dow, like me. And I do the same. I look at the larger time frames, and then I'll go to a 10-minute or a 15-minute or a 20-minute, and I'm looking for some kind of confirmation in those time frames myself, or 5 minutes. But everybody's different. Yeah, Eleni says, if you are standing so close to the tree, you will never chop it down. That's it. That was to do with if you're looking at a 1-minute chart. And yeah, they can be quite scary, actually, 1-minute chart. The movements look big. Okay, so if anyone's got any other any charts or anything you want Tom to comment upon, please put them up. And I've had a reminder here to tell you about Tom's book. I'll put the link in. Tom wrote a book called The Undeclared Secrets That Drive the Stock Market, which you new people might be interested in. I'm just right. It's genichartist.com, isn't it? I think. Okay. Seb's saying, can you bring up the website? Pete, do you want to put the website up, or is that difficult? It's certainly the one that I read first, more than once, I have to say. Eleni's saying his best book. Oh yeah, it is genichartist.com. Is it there? Yeah, that's the website. Is that being shown? Yeah. Yeah. Okay, so if anyone's got any other charts they want Tom to look at, please say. What's that, half hour?
Was it half an hour?
Someone's actually asking for gold.
Go on, put gold up. I think gold weekly chart's probably better. Weekly. What's this?
Gold. The weekly, like.
Yeah. Now I don't follow gold, so I'm not really. I don't like those trend lines. Well, they were probably good, but the computer stores those trend lines, and the reason is that's how it creates trend clusters. Which, if you study trend clusters, it's quite fascinating how they work. A trend cluster is where one or more of these trend lines from the past meet. And when the data, if the data, not when, if the data reaches them, something will happen. And if you watch it, it's quite uncanny how the market does not like touching these areas, trend clusters, and they even pop up between them, given half a chance. So it's quite fascinating. I'm not saying it's fantastic to trade on, but it's just information that all adds up. Now, I would strongly advise you to read and listen to the newsletter we do, because you can see how important the daily chart is, so we can trade in harmony with that, or at least be influenced by it. So if they try to confuse you or mislead you by, say, marking it up when you know that the daily chart's weak and falling, right, you won't be misled. And we also look at what we call the KG chart, and that's been showing bearish. Well, it was in the last newsletter. So that's also very interesting. Now what's this gold? A weekly chart of gold. Well, first thing you can see is it looks like some buying's gone on here. Right, here we are, the stopping volume. Volume, another word is activity. So you've got this market plummeted down here, look. Right, the activity is tremendously high, and on that activity is closed in the middle. Now that's got to be a sign of strength, and it's thrown up an automatic signal which tells you just what I've told you. Study those dialog boxes. They hold a lot of information that's going to turn you slowly or rapidly into an expert. Okay, that's stopping volume. Now we know, right, that's stopping volume. They know they're not, we know they're not going to move that up into a bullish move unless it's tested. So we're expecting that level to be reached sometime. Now we draw a line across there if we can. Is that it? There. Now that line there is important because if the market at some time goes down into that area or touches that line and the volume is definitely clearly a lot less than this volume here, then we know that at that moment supply has disappeared. You'd expect it to go up. Now it's not going to go up into a huge bull move, right? This is just what we call stopping volume. Professional money think, right, we can move in here, make a bit of money, then get out. Just same as you want to do and we do. So what we're looking for is a down bar touching that line or more or less in that area, and the volume is clearly low. If the activity is clearly low, right, it shows that the supply that was here, seen by this ultra high volume, look, has disappeared. That's all professional money wants to know, and they'll take that up. Because when they mark these things up, it costs them money. And they cannot afford other professionals dumping onto their move. So they have to maintain the bull move. That's why the trading system tends to work. Okay, so that's gold. Now it's a weekly chart. And I think a weekly chart in these markets that are traded heavily with the public are very good.
Gregory is asking, why is the line below the stopping volume bar?
Because I can't see very well. I'm sorry. Peter's readjusting it. I've got bad eyesight. Unfortunately, I'm 84 and I've got macular degeneration, and I have to stick my nose literally within 6 inches of this screen to see the chart. So that's why it's below, for no other reason at all. Sorry about that.
And Sebastian's saying that was a test from Tom to make sure you are alert. Exactly. Gregory is awake. Soybean futures requested by Tim. Could we look at that? This is the only one we've got. SM. Soybean meal daily.
Daily chart says, yeah. Is there a page on this? Looks like big weakness there. Is that red? No, it's green still. All the time, the KG chart showing green. That mark is not necessarily weak.
It's not that one. It's this one. Sorry, we got the wrong one.
Got the wrong one. Sorry. See that?
Soybeans and
See that basically looks a bit weak to me.
Showing some
little bit of red there, is there? Well, it's showing a little bit of weakness. But looking at the daily chart, I would have thought it looks quite weak. What market is it? Soybeans. Yeah, so you've got to be careful with these commodities because they have this limit up, limit down business. They can lock you into trades you can't get out of. So you've got to be careful. But this, to me, overall looks weak. Why? Because that there looks like an upthrust. There's an automatic signal there. Upthrust. And you don't get that action followed by these. That's more or less like a gotcha bar look. This market looks weak. Be very, very surprised if that goes up. It's more likely to fall than go up. But they're devious, they're cunning, they're whipsaw, they'll convince you you're wrong. Okay?
Okay, and Paul is saying, please comment on the influence of the Japanese market, e.g. chart of EWJ. So we don't know what is EWJ. We're just putting it into the is this the chart that you're talking about, Paul? And what is EWJ? ETN for Japan. You mean says Eleni.
Japanese currency for the country.
Pete. Yes, ETN for Japan.
Again.
I don't know. It just says ETN for Japan. Tom?
Right, I don't follow Japanese yen, but I heard a week or so ago there was some good news. Apparently, Japan was pumping. They never use the word millions these days. It's always billions of yen into their market, which inevitably is going to make it strong. However, that must have happened here, look. Now, the whole thing is here that this is definitely signs of weakness up here, look. And this gap down here, strong markets don't gap down like that, right? They know perfectly well that this news is coming out. So they mark it down. The news comes out here about the Japanese government pumping billions into the market, right? And so it drifts up on that. But, and I say drift, is there any demand there? Now, the only thing you can do here is sit tight. And again, if this market is strong, right, it's going to test these lower levels. It's not really all that clear at the moment, but you do appear to have some strength here. That looks like strength right there. And this obviously is here. You could trade these if you see them, but you're only going to be in for a short time, aren't you? You're not expecting this to go to the moon. And you've got no demand here. Okay?
Yeah, so let me have a look here. Any questions? Eleni's saying it's the Nikkei. No. No? Let's read the whole thing then. What's Eleni saying? So I need a pair of glasses, Rita. You better read it. Hopes, Rita.
Eleni is saying Nikkei, if that's how I pronounce it, came in quite a bit 2 days ago. 800-point move in one day. Wow, that was Nikkei. We could put. We got the chart there? Oh, we haven't. Okay. All right. So no more questions. So we'll say goodbye. Unless you have time, have you got anything else to say? Have you got anything else to say, Tom? No more questions.
Well, okay, we'll just say thank you very, very much for listening. And please read the newsletter. And I think you'll find the newsletter very, very interesting. Trade in harmony with the market. Okay? And I'll say goodbye.
Okay, thank you folks for coming along today. Nice to see you all here, and we'll see you all next week, all being well, and look out for the newsletter tomorrow, which we'll be doing here in the UK at around about lunchtime. So with that, I'll say thank you and goodbye to everyone. Have a good weekend.
Welcome to GoToWebinar, Web Events Made Easy.